Joining us now to talk more about the health of the housing market is Odeta Kushi. She is the Deputy Chief Economist at First American Financial. Welcome. Nice to have you with us.
Great to be here.
Now, the market did soften a little bit in April and the month before, but you see a silver lining. You see things improving. Why?
Absolutely. Our outlook for 2019 is largely the same despite softening April numbers. We're seeing the market purchasing power really benefiting from affordability tailwinds from low mortgage rates and a strengthening labor market with no signs of slowing down. And on top of that, you have slower house price appreciation, which is helping on the affordability side.
You also track something called tenure length, which is the amount of time that a homeowner spends in the home. And it reached 11 years, a 9% increase compared with a year ago. Why is that? Is that a fundamental shift?
So what we see is before the recession, average tenure was approximately 5 years. But as homeowners were locking into 3.5% mortgages, they're really feeling rate locked in, despite the fact that mortgages are flirting with about 4%. So as mortgage rates continue to decline, we should see some loosening of that rate lock-in effect and having that tenure start to decline a little bit.
Well, as one who had her first mortgage at 16% way back when, 3 and 4% sounds pretty good. What about the trade situation that's going on right now? Could that have a dampening effect on demand?
Absolutely. So the trade effect, there could be two sides to it. Obviously, it could have the impact on mortgage rates, declining mortgage rates, which could be a positive for the housing market. But on the flip side of that, there's the implication that about a 25% tariff would hit the construction industry by about $2.5 billion in taxes. So obviously another headwind to the construction industry.
Now, we did hear in the past 2 months that the elimination of state and local tax deductions in some of the high tax states really dampened sales. Has that evened out at all?
So we haven't really seen the impact of the tax change on the national scale nor the state scale. In fact, you have to get down to, very specific micro geographies, really high cost markets to even see any impact on sales and home prices.
Well, that's a little bit of good news. If mortgage rates decline a little bit further, might that juice the home market a little bit more and also maybe get people to list those houses at more reasonable prices?
Absolutely. That's what we're waiting for. If mortgage rates continue to fall, it'll push those existing homeowners to move up into another home, and it'll also really prop affordability for that first-time home buyer.
Odeta, thank you so much.
Thank you.
Odeta Kushi with First American Financial.